Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because we finally made it to Q4. And it's crazy to think that it's been 4 months since we first introduced this Bitcoin summer seasonality chart in early June, and how the price action ended up being almost perfectly in line with what we've expected from Bitcoin in those summer periods outside of those post-halving years like 2017 and 2021. But the reason why I look forward to Q4 is because there's always major moves and volatility in both directions, and I find that a lot more exciting than the painful, boring chop that we see in the summer leading up to Q4. And we've seen this each and every year. In 2015, we had a huge rally. In 2016, another huge rally. In 2017, also a huge rally for Bitcoin. In 2018, we saw a small rally in October and then a huge drop in November, kind of like what we saw in 2022. In 2019, we saw an October rally and then a big sell-off in November as well. 2020 was incredibly volatile to the upside, and then 2021, we had a rally in October and then a sell-off in November, and the most recent one, 2023, tiny sell-off in the beginning of October, and then a very strong rally to the upside. And the trend you may have noticed is that October is almost always green, but it's November that really decides how Q4 is going to go. And we see this when we look at the monthly returns. October is green almost every single year, or sideways if it's slightly down. But if we look at November, December, we can see that December almost always ends up being the same direction as November. So usually October is green, and then in November, we find out if we're going to be getting continuation or if we're going to be seeing a huge reversal into the end of the year in December as well. Another thing that jumps out at me is that Q4 has been incredibly bullish in election years like the one we're in today, with October, November, and December being green in 2020 and in 2016. And of course, we're going to have to wait to find out if 2024 is going to be the same way, but because of how much consolidation we've seen in the summer of this year, I'm expecting major moves and expansion now that we've reached 2024. And this volatility in Q4 agrees very nicely with what we've seen in election years from July to November. We tend to see increasing volatility as we approach the election, and with this current election remaining very close, even with it being just 34 days away, it feels like this year is going to be no different as we approach election day. We're already seeing that increase slowly month over month in the VIX, the S&P Volatility Index, and we're seeing that have an impact on the S&P 500, still holding above that all-time high breakout, which is our line in the sand on whether or not we need to be concerned if it were to fall through that level on a weekly closing basis. But we are seeing that volatility start to kick in, especially with the drama we saw yesterday. And it's no surprise that that also carried over to Bitcoin. But October is just getting started. We're only on day 2. And we do expect that both Bitcoin and the S&P 500 will be quite volatile over the next few weeks as we approach the election. But as long as the S&P 500 doesn't roll over aggressively, Bitcoin will have room to go higher. And this is why being prepared for different scenarios is so important, because volatility goes in both directions. We could have volatility to the upside. We could also have major volatility to the downside. So if we're too set on one possible outcome, we'll get blindsided by the alternative. And that's when I've seen so many people make mistakes they end up regretting later, because they end up being reactive and making decisions in the moment based on what's happening that day. And I can make very arguments for all 3 of these scenarios, which is why I have them outlined here. The shortened cycle scenario is probably the easiest to argue because we're not expecting these FTX distribution payments until the end of this year or early next year. So it would make sense to me for the market to rally into that event. And then all of that cash being returned to creditors will be used as exit liquidity as they all pile into the market while it's rallying. Another reason why I think it's very possible we can have a shortened cycle is that there's a lot of Bitcoin on OTC desks. And even though I still see people talking about 500K Bitcoin this cycle or $1 million Bitcoin this cycle, everyone in this space always underestimates the amount of supply that can show up as Bitcoin's price goes higher and as the whales and miners begin to sell their Bitcoin once Bitcoin is in price discovery and trading at 80,000 or 90,000 or 100,000. So those price targets above 150K just don't make a lot of sense to me, in my opinion, because I do think the sell pressure would be too strong if Bitcoin were to reach those prices in Q1 of 2025. As for the arguments for the delayed cycle scenario where it takes us quite a bit longer before we enter price discovery, but that would allow us to rally higher, we see that there's a lot of people betting on 100K Bitcoin within the next 6 months or so, with $1 billion of open interest on Deribit. And usually when everybody is expecting major upside and buying those calls betting on higher prices, it ends up taking a lot longer than the market currently expects. All of those contracts expire worthless, and then maybe the rally begins. And we're also still seeing very little retail interest in this market. We're not seeing the type of inflows we would need to see for Bitcoin to start rallying higher immediately. And that's perhaps why the delayed cycle scenario might make a lot of sense as well. So you can see there's very strong arguments for both cases. And of course, for the failed cycle, there could always be a black swan. Maybe the Fed messes something up drastically and tightens for too long and keeps shrinking their balance sheet and sticks to doing QT longer than the economy can handle. And that's why we always have to keep an eye on these three scenarios and have a plan for each outcome so we don't get blindsided and end up making mistakes. And for me, my plan is very simple. In the short term, as long as Bitcoin doesn't close below 61.5K, this is just a very healthy pullback in the beginning of October before it likely rallies higher. And I'm not really interested in doing much. I know it's still possible that Bitcoin could go to the low 40,000s if there were to be some event that catches us off guard, or if the Fed ends up taking too long with their QT and doesn't go back to QE as soon as the market expects. So for me, it's pretty simple. I'm not really interested in buying Bitcoin until it goes back into the green zone here. And you can see that I've renamed these areas because I think it better answers this question of, is it a good time to buy Bitcoin? Maybe the best word to describe this orange region wasn't overvalued. I know that confused a lot of people. I think a better way to put it is expensive. So for those of us that bought Bitcoin in the very cheap area or the cheap area, it would be quite expensive to be adding aggressively above 70,000 because your cost basis is so much lower, or at least that's how I like to approach it. So once Bitcoin is above 70K, buying for me is completely off the table. If I was underexposed, I wouldn't mind buying here. And I do have cash on the sidelines that I may choose to deploy if Bitcoin goes back into the cheap region, but I don't know if we end up going back to those levels depending on how Q4 ends up going. Now, speaking of Bitcoin going lower, let's go ahead and look at global liquidity. It has been rolling over slightly recently, even with the stimulus from China. And that's because even though the Fed has begun cutting interest rates, they are still carrying on with QT and shrinking their balance sheet. And they haven't gone back to QE yet. But I would not be surprised if they announced that in the November or December meeting. So we're going to have to watch the Fed balance sheet very closely because it tends to have a huge impact on global liquidity going back to 2008 when the Fed first invented QE. So it's great that they're lowering interest rates, but until they start increasing their balance sheet again, we might not see the big increase in global liquidity that we need to send Bitcoin significantly higher in the short term. But of course, we'll continue monitoring this. It could just be coming down to put in a higher low before it continues higher, but we're not going to know that until we see it turn around. But as of right now, going sideways for the most part. And you can see that global liquidity rolled over here, and then so did Bitcoin. And they don't always move in lockstep in the short term, but on larger time frames, we see very, very clear correlation between Bitcoin and global liquidity, which is why I always monitor it on this channel. And speaking of liquidity, we have a strong bounce here in the US dollar index because of all the global tensions that went on probably yesterday. We still have that major resistance coming in at about 102.5, where all of those moving average are going to be as well. So it would make sense for the dollar index to bounce up to there and then roll over and perhaps really enter that risk on zone as global liquidity increases, perhaps because QE is brought back by the Fed. But as of right now, this is still a bounce in the dollar index. I don't expect Bitcoin to do anything incredible while the dollar index is bouncing because of the strong inverse correlation we've seen from them historically and how Bitcoin's mania phases have always required prolonged downtrends in the US dollar index, and we haven't seen that quite yet. We've mostly seen sideways price action, and we're waiting for it to bounce and roll over. And that's also when we expect to see those major alt seasons as well. Once Bitcoin enters price discovery, investors start to go out on the risk curve to altcoins, and that's when you tend to see your alt seasons. And I still know there's a lot of people out there talking about how rate cuts are bearish and how the markets are going to crash like 2008 and 2001. And yes, that's always a possibility, but that focuses too much on one variable, which is the Fed funds rate, and completely ignores the deficit spending we're seeing from the US federal government. October is the last month for the fiscal year of 2024, and we're likely going to see this cross $2 trillion in deficit spending for the fiscal year of 2024. And this is very uncommon outside of recessions. If we look at 2008, the deficit was only 400 billion. And if we look at the dot-com crash in 2001, the government was actually in a surplus of about 150 billion. So these huge deficits of 1.3 trillion, 1.7 trillion for 2023, and now almost 2 trillion for 2024 is making the debt issuance go off the charts, and the money supply will end up following as well. And that's why we see this clear relationship between risk assets and national debt, because eventually that national debt gets monetized and it devalues the currency. And because we use the fiat currency as a denominator for our risk assets like the S&P 500 and Bitcoin, we see increases in the prices of those risk assets on larger timeframes. And now that Bitcoin has regulatory clarity and we have these US-based Bitcoin ETFs that investors can easily allocate to, all we need is for this election uncertainty to be behind us so markets can finally feel comfortable going a little more risk on. And then we also need the Federal Reserve to go back to QE and go back to increasing their balance sheet and monetizing the debt, which will send global liquidity higher. And if global liquidity goes higher, it likely takes Bitcoin with it. So for me, this is one huge reaccumulation phase. We likely pick our direction in Q4 because that's when Bitcoin has seen the most volatility historically. And although October is likely going to be green, November has really been the deciding factor for Bitcoin's trend each and every cycle going all the way back to 2015. So we'll see what happens this time. It's great to see that these ETFs are still getting a ton of inflows, even though we're 9 months after launch and we're still seeing more and more Bitcoin being taken off the market and locked up in these ETFs, and a lot less likely to get sold because I would expect the majority of these investors to be a little bit more long-term oriented. But these things can definitely take time, and we might have to be patient for a couple more weeks before the move really gets started. As for the economic data, we have a very important labor market print on Friday with an update to the unemployment rate. The market expectation right now is 4.2%, which is the same reading we got last month. So if that ends up coming in above expectations, that could spook markets a little bit. But when we take a look at initial jobless claims, they're still trending down and way below recession start averages. Same thing for continuing jobless claims, still going down slightly. and still well below the recession start average. And if we look at inflation, still below 2% on trueflation, even though it's been ticking up recently ever since the Fed announced those 50 basis point rate cuts. But as long as this stays below 2.5%, nothing really to worry about in my opinion, but we'll continue to monitor this, and it's great that it gets updated each and every day. And with our monthly PCE print that we got last week, it's still trending in the right direction. Core PCE is being a little bit more stubborn, but it's still below 3% as well. And if we take a look at the real GDP estimate from the Atlanta Fed, I know this is very volatile and it can always be revised down in the future, but it's nice to see that it's still well above 2%, like it has been for the past 5 or 6 quarters in a row. So no huge warning signs for the economy quite yet, at least in the short term, but that's why we continue to monitor this data. We're going to keep an eye on GDP, we're going to keep an eye on inflation, and perhaps most importantly, we're going to keep an eye on the labor market, because this is the data point that markets care about the most, and it's the one that has the largest impact on the economy. So for now, we're going to wait patiently to see what the Federal Reserve does and when they're going to go back to QE and bring that global liquidity a lot higher. And we're going to look forward to finally seeing some volatility and excitement in this market after 4 months of painful and boring chop. But anyway, if you're watching this, congratulations on making it through Bitcoin's summer chop seasonality, and I look forward to an amazing Q4. Let me know what you expect. Will October be green or red? And will Q4 be green or red? Would love to know what you think. But as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.